What's up, y'all? It's Tommy here with Everyday Finance, and in this video I'm going to be breaking down how to build business credit with easy approval credit that's available out in the marketplace. Before I jump into this, I want to just let you know I'm making a few assumptions, right? I'm assuming that you want to have a successful business, and that's why you actually decided to look into getting access to business credit. I know there's some people out there who just want access to credit in general, right? And I think that there's going to be faster methods for you to get access to that type of credit. This is going to be more so for people who are looking to build a business and how to get access to credit that can help you grow your business faster, but it's not going to be it might not be actual tangible credit. And that'll make sense whenever I kind of break down exactly the process that I would follow, right? Another point I want to touch on is the way I look at business credit is that it's more for you to grow a business as opposed to you trying to start a business, right? I think anyone who recommends otherwise probably isn't running a successful business themselves, or a successful business that they're running is literally selling you on using business credit to start a business, right? Because when you're starting a business, a lot of things are going to go wrong, and you'd rather not be on the hook for things that are going wrong and end up being in the negative before the business even really got started. So that's why I typically recommend that you put your own money in, because you tend to be a lot more careful with the funds when they're your own money, as opposed to when you're using credit. You think almost that it almost gets to a point where it feels like it's not yours, right? It's money that you have, but that you don't really attach it to, oh, this is my money, right? You look at it more so as the bank's money. And what that leads to is overspending, spending on things you don't need to, and eventually you exhausting all your funds and being in a situation where the company's not profitable yet. And now you're kind of stuck in this dilemma, right? So that's kind of the lens that I'm looking through, right? Is that you are trying to, grow your business with credit, even though you might not have a business yet, or you're in the process of starting a business. This is going to be more positioning you for, I don't even want to say the long term, maybe the midterm, but it's not something that's going to be, you're going to get access to large amounts of credit short term, right? Okay. So first off, the way I would start right off the bat is by adding trade lines that you can really get easily approved for. Now, there is a lot out there that you hear about, where it's like these websites that can give you different types of trade lines. Really, the only ones I've seen that have given me reasonable success would be, a website like a quill.com or something. But a lot of those smaller websites I haven't had much success with. So I started obviously looking at other types of credit that I get access to, because really my main point, or my main thought process looking at it, was I just need lines that are reporting and showing that I actually pay on time when I'm using these lines. That's really the big thing for me. Okay. Now, so the ones I typically recommend is using more of the fintech cards like Divvy. Divvy has a new credit builder card, which is great because now it allows you to get access to these corporate cards, even if you just started your business. Previously, they would look at your revenue and things like that, and it was a lot harder for people to get qualified. Now it's just strictly based off of you having a business. They're able to extend you one of these credit builder cards. Okay. And I'll link to all these websites below so you can be able to take a look at them. Okay, Divvy included. Now, the next one I recommend is the Wells Fargo secured card. Now, I recently shot a video on this card and basically told my experience of how I leveraged this card. And it started off as a secured card. I recently just got upgraded the card recently graduated to unsecured Wells Fargo business card. Now, again, this card has a personal guarantee on it, whereas the Divvy card doesn't. But I don't look at it for that intention. I have no intention of, maxing out the card. I use it for small expenses, and I usually pay back immediately. So I have no worries when it comes to that. But this card also reports to, it's going to be reporting onto your business credit. So that's the benefit with that. Now, another one is going to be NAV. NAV is going to be another trade line you can add. They have a plan, I believe it's called the NAV Boost, where they report to your business credit as well. But there's another benefit for them as well, for you to get at one of their paid plans, is that NAV will allow you to pull your competitors' information, right? So what a lot of people don't know is that business credit reports are essentially public information. You can pull anybody's report. It's not like your personal credit, where I can't get your personal credit unless I have you sign forms basically authorizing me to pull your personal credit. With business credit, you can pull any company's credit report, right? And so NAV allows you to pull they position it as your competitors' information. And that's where I think the benefit is. You can actually pull your competitors' information and see what kind of trade lines they have reporting and apply to those similar trade lines, right? Especially if they're the ones that fall in line for your business, okay? And the reason why I mentioned that is because it kind of segues into my next point, right? What I would do is, once I have these few trade lines reporting, I will now start looking for vendors in my industry that I can get to report to business credit as well, right? So because you have the NAV boost, which I'll link to down below, NAV will now allow you to be able to pull your competitors' credit reports and see exactly what kind of vendors they're using, right? Especially, I'm not going to say all vendors are going to be reporting to your business credit, but the ones that are reporting, it's a high chance that you can be able to get approved and have a reporting trade line from them as well, right? So that's the way I would kind of leverage it. Obviously, for most industries, it'll make sense for them to use, vendor credit like a quill.com, right? They have net 30 accounts. But what you really want to focus on here is going to be, you really want to focus on businesses that are offering net 30 accounts that you'll actually plan on using. Because Quill.com, from what I saw, things were they seem kind of overpriced. There's definitely cheaper places that you could go to get a lot of the items that they sold. But people sign up for the trade line, right? Now, what you really want to focus on is you want to start looking at vendors that'll give you net 30 terms or even better terms, net 60, net 90, whatever the case may be, but that you can apply to your business. And the reason being is, I really think having credit from other business, i.e. suppliers, vendors, is going to be more powerful than getting credit from banks, especially whenever you're first starting off. The reason being is, especially if you're selling physical products, you're going to see one of the biggest issues that you're going to have when you're growing, or the biggest growing pains that you're going to have is, the cost of the actual inventory. Most of your money that you're making is going to be poured back into your inventory, right? And it's going to leave you cash poor. You're really not going to have that much money to run your business. So if you're able to get your vendors, right, or your suppliers to, pretty much give you terms on the inventory that you're buying, or maybe even give you the inventory on consignment where they're saying, hey, pay us back in 60 days or 90 days. That might make it to where now you can grow your business infinitely because, they're giving me this inventory and I don't have to pay them until I get paid for my customer, right? That's kind of how you want to look at it. That to me is way more powerful than you getting a credit card from, Bank of America, Chase Bank or something, right? Because now, first you're working with your vendor directly, right? They're going to give you more favorable terms. And as you continue to grow, you're going to be able to leverage that relationship to maybe get the product cheaper, get even better terms, a lot of things down the road, right? And that has a lot more to gain than you just leveraging maybe a credit card that's charging you 25% or whatever it is, right? So that's kind of how you want to look at it. Now, I think that's going to be a good starting point for a lot of people, especially a lot of people who are looking to build their business credit that aren't sure exactly how to get moving. You really want to nail down exactly what you want to do as a business, and then you can start looking at, what kind of vendors you are going to need to leverage to be able to really, blow up your business with the credit that you can get from those vendors. Okay. So that's going to be it for this video, guys. I hope that gives you an idea how to jumpstart your business credit journey. If you want more business credit videos, comment down below what you'd like to see, and I'll be happy to shoot those videos. I also link below to a playlist of different business credit videos I've shot as well, if you're starting from scratch. And that'll be pretty much it, guys. Be sure you throw a like on this video if you found this information valuable, and make sure that you hit the subscribe button down below so you don't miss any of my future videos. Alrighty, so that's gonna be it, guys. I appreciate y'all watching, and I'll see you at the next one. Peace.